Welcome back to the Compound Trading Group's YouTube channel. It's your boy Jay Trades, and today's video I will be going over how I use market structure with combination of price action and the relationship with the EMAs to go ahead and take breakout trades with confirmation, as well as taking some breakout trades prematurely before the actual impulse does happen. Stay to the end of the video to go ahead and check out how I go ahead and do that. Stay tuned and thanks for watching. Let's get started. Alright guys, in this video I will be going over my thought process in regards to what I am looking at the charts for breakouts. I love playing breakout trades. I'm a retest trader, breakout trader, you name it, I'm in there. So that being said, let's go ahead and get started with the actual price action chart and going through it, and with my thought analysis is on it as well, right? So for instance, being said here, right, I use Fibonacci retracements a lot, right, with the extensions combination. So a little combo wombo. So for instance, the way that I play the actual fibs is I plot it from up to down. I have the starting point from the bottom to the top, the retracement, and then the 1.272. So you're looking for this impulse, which you're starting, that impulse starts down here, above, retracement, the target, right, the 1.272, but you're pulling it from the top to bottom, right, because you're looking for that upside extension, that impulse that does hold this golden ratio to hit the 1.272. Now that we have that down and we know what we're looking at in regards to the fibs, let's go ahead and plot one, right? So for instance, I'm plotting it from the top to the bottom, right? You got the impulsive move, first impulse, the retracement, the next impulse to the 1.272. So this plays essentially you hit it from the actual golden ratio when price action is being held at the golden ratio to then take it to the 1.272, right? That's almost a $1.30 move just within this move here, right? So let's go ahead and get started with price action. Just wanted to give you guys a little idea as why I started here. Let's go ahead and keep playing price action. I do have this on replay mode on the 5-minute time frame. The 1.272 has been hit, and most of the times, not always, it does also act as resistance for the next pullback back down, right? So that being said, let's go ahead and get rid of this. We have this golden ratio here that also keep an eye that we do have an upside gap, right? So potentially now we still have this liquidity up here to be grabbed, right? So just keep that in mind. So it did reject the 20 EMA here. You're noticing it's an inverse hammer. Let's keep playing price action. The 1.272, as you can tell, is being held also as resistance. And now you have the 3 touches in regards to the trend line to break to the downside. So let's go ahead and keep playing, right? You see it crosses below VWAP here. So that's already an indication that, hey, this move here is probably just a stop now. If you were in this trade and you didn't take profit here, that's a great time to be out and close the trade. If you were an upside trade here, if you were a bearish trade here, the move is just getting started for you. So let's go ahead and take out these fibs here. Let's go ahead and keep an eye on price action, right? And also I will be looking at structure with combination of this play as well, right? So for instance here, it did go ahead and break this low here. So now this would be considered a lower low. As you can tell, it is on a bearish structure. So this is not bullish whatsoever at this current moment, right? Let's go ahead and keep playing this price action. So that being said, it did create the low here. It created a nice upside pivot, right? So for instance, it created this lower low here. Now it should create a lower high within this area to continue bearish structure on this 5-minute time frame, right? So what we want to see is for this to create a lower low, a lower high, I apologize, within this area to then continue downward, right? So let's keep an eye out and see what happens here. price action, it continues to play out. Keep an eye out in the EMAs, right? The EMAs currently, they have a nice gap to the actual price action. For instance, here, the 9 EMA is pretty gapped to the 20 EMA. If the 20 EMA is above the 9 EMA, that tells me that that is still bearish action, right? When the 9 is above the 20, that tells me that it's bullish action that's currently happening at this current moment, right? So here we can already begin to draw a trend line. What is it kind of looking like to you guys here, right? It's looking like a pattern, like a triangle, like a pennant, right? What do pennants do? They break. So for instance here, let's go ahead and keep playing this price action here. You see now it's beginning to break this upper pivot here from this lower pattern that's down here, right? So for instance, for this to continue downward, we would need price action to continue to the downside here. We need this to come up here and then continue downward. But let's keep an eye on what price action continues to do, and then we can go from there, right? So that being said, you notice, hey, price action is now breaking out. It did the retest and it broke to the upside, right? So this is where my 5-minute EMA impulse, I like to call it theory, comes into play, right? So you see coming down, the 9 EMA is being held as resistance to this price action. It never goes above the 9 EMA within this here, and you still have the gap within the actual EMAs, and they're pointing downward. Here, you see the first potential break to the upside, and it's still being rejected by the 20 EMA, with 20 EMA still pointing downward, right? Also take a look at VWAP. VWAP below is pretty bearish. When it's above, it's bullish to me, right? Keep in mind that you also do have this upside gap here. So that being said, now we have an idea of what we are looking at price action wise, right? So when I do, what I noticed in regards to when a potential reversal is about to happen is that price action impulses from below the 9 EMA to above the 20 EMA, right? So that tells me that, hey, could be the potential start to a new trend, meaning this is bearish trend to go ahead and turn into a bullish trend to the upside, right? Because I'm noticing that the 9 EMA got broken into, the 20 EMA also got broken into. So now what I will go ahead and do is I will plot the fibs to look for a potential pullback to then continue that upward momentum, right? So that's what I'm about to do. Let's go ahead and plot the fibs. So from that first candle that went ahead and impulsed from below to above, right, to the bottom of this pivot down here, right? Because you're looking for this impulse to the retracement to then to continue to the next impulse to the 1.272, right? So that being said, let's go ahead and continue playing this chart. Taking a look here, you're noticing that now it's above VWAP, it's above the 20 EMA. And for the price action to actually go ahead and turn to the upside, I do like to go ahead and keep an eye out in regards to the EMA, right? So like I stated in the beginning of the video, there's 2 ways that I will take breakout trades. This is that first indication, which is that premature entry. You don't necessarily have all the confirmations for upside still, or I apologize, more like yet. But here you're getting that first indication that price action can potentially reverse to the upside. So let's go ahead and keep on playing the actual price action here, right? Okay, closes above the 20 EMA. It retraces right back down to the golden ratio. So that's what I like to keep an eye out in regards to when I do have that potential pullback into the golden ratio, right? Let's go ahead and keep an eye on what it does. Oh, it does the tweezer candles here at this golden ratio to then close above the 20 EMA. So if you were looking for a potential entry, here you could definitely take in it once it came down to the actual golden ratio. Or what you could also go ahead and do is switch time frames, right? Now let's go ahead. Let me just erase this so I can show you guys structure in regards to the actual price action here, right? Now this is before on the 3-minute. Let's go ahead and take a look at what I would be doing here or looking at at the 3-minute chart, right? So you have this pivot here. You have this upper pivot here as well. and you have this lower pivot here, right? So this is what I like to call a funnel structure. With a funnel structure, I am looking for potentially for this pivot or this pivot to be broken. That being said, if it breaks this upper pivot here, I can see that this is upside pivot that has been broken, and now I like to call this change of character on a smaller time frame. This as well, if it broke to the downside, it would just be bearish continuation to the downside, right? So that being said, look at the EMAs as well. It's the same thing that I look at on the higher time frame. It has a nice gap. It begins to tighten up, and the impulse on the actual EMAs, right? So this is that premature entry as well. For instance, let's go ahead and plot the fibs. You see how it does hold the golden ratio. It holds the golden ratio once again. If we were to be plotting it on a 5-minute time frame, obviously I would be using this pivot up here, the entry down here, but this is the 3-minute time frame, which I am looking at, or I went ahead and switched to. So that being said, it broke the most recent lower high. So what we are looking for continuation, for change of character, is for a lower, I apologize, for a higher low, right? If this was bearish, this structure point down here would be broken. But as you can see here, you have a good idea of where price action can retrace to and hold. That being said, it came right down to the golden ratio. It broke this triangle or pennant. It did the retest, so this is essentially just a retest of the breakout to then continue upward momentum. And as you can tell here, right above, as soon as it held the golden ratio, the retest area created a higher low. Now, what did it go ahead and do, right? It broke this upper pivot here to create a higher high. So for continuation, what are we going to look for, right? We're going to look for a higher low, which essentially is this area right here, right? This potential pivot here is telling you that this is now a higher low. So it's a great spot for an entry, seeing that it's right at the golden ratio on the 3-minute and the 5-minute time frame. So now that you've been in the trade, if you enter either here or here, you're at the start of the move, right? You're at the actual start before the actual move happens now, because that's the way that I'm looking at the market. I look at the market as a pattern of congestion. So I look at the market in 2 phases, which is the congestion phase and the impulsive phase, right? But for the impulsive phase to happen, you have to break above, retest, and then continue upward, right? And that's essentially just this, what's happening currently. So now this is just continuation to the upside. Now we went ahead and looked at the 5-minute EMA impulse, also a combination of a 3-minute EMA impulse. Same principle, same thing happened, right? Keep in mind we still have this upside gap to be filled. Let's go ahead, and now that we've looked at the 3-minute structure, let's go back to the 5-minute and take a look there, right? Okay, perfect. Now, if you're taking a look here, you're noticing that price action is being held right at the EMAs. So instead of the 9 EMA being held as resistance, now it's starting to hold as support. The 20 EMA also as support here above. So now you also notice that this is a higher time frame pattern. So we have this smaller time frame pattern, 3-minute, 1-minute pattern, which now is being built within the 5-minute pattern. So let's go ahead and take these fibs out, these pivot points, now that we're in the trade and we know what we're looking for in regards to pivots, right? Let's go ahead and continue with the actual trade. Bam, right? Let's go ahead and put these fibs right back. And like I was stating, the golden ratio to the 1.272 is the potential play here in regards to with the fibs. But the fibs do allow you to go ahead and get great entry points with low risk and higher reward in regards to the trade itself. So you notice that now it has hit the 1.272, right? You see how I was explaining in regards to the EMAs. Now the 9 EMA is going right above the 20 EMA, and it just crossed. So now what you're looking for is for the EMAs to be held as support to then continue the upward trend, right? Let's go ahead and keep playing on what's happening. The price action. Now this is another pattern, which is the flag continuation pattern. These are the only plays that most play, not the only plays, but the 2 of the 3 plays that I do go ahead and play are just essentially within this area. I look for the entries here to then, if the price action does look still good, I allow my trade to do its work and continue upward, right? So now that we have this first leg that has now been complete at the 1.272, let's go ahead and look for the continuation leg, right? So now what I'm going to do is the same thing. I'm going to look for the fibs to be held at this golden ratio, which happens to be right at 20 EMA, the 9 EMA, right? I'm getting this leg to then get the retracement entry and then the target up here. And look what the target does come out with, right? At the top of the gap, which does have a higher probability of being played out to the upside. So now I apologize, I erased that. Let me go ahead and plot these right back. And let's look at price action. Look what it does. It comes right back down to the golden ratio. You never want to buy into an impulsive move because you're basically buying what these people that enter down here are selling to you, right? They're taking profit up here, especially if there's a structure point up here. This supply zone up here, people are going to start scaling out, right? And look what, right where it wicked at. It's right at the supply zone up here. So now that we have this 9 EMA cross above the 20 EMA, this is now what I consider my A+ setup. My A+ setup is basically when you have a breakout, you have the 9 EMA above the 20 EMA, that's already giving me the indication of bullish price action when the 9 is above the 20. So now what I'm looking for is for price action to come down to the golden ratio, to look for a potential entry within this area, the shaded area, to then take the next leg up to the upside. Let's keep playing what price action is doing. And as you notice, price action went from being a nice sized gap with relationship to the EMAs, to tighten EMAs, to then the actual cross. But this move alone was the indication to me that price action had the potential for this, right? Because this is what happens before the reversal, right? So it's being held as resistance, and now all of a sudden it's being held as support. Let's go ahead and keep playing on with the replay mode in regards to what it does. As you can see, it held the golden ratio. Price action held this golden ratio. You have this flag here, and that's what happens. You have, this is a nice healthy pullback to me. So here it created that higher point, right? Now it created this higher low with right at the actual fib area, EMA area, that did end up holding as support. Bam, see what it did go ahead and do. So if you missed that first entry down here where you got that first indication of a potential reversal, I like to consider this maybe like a B+ setup, A- setup. It mostly tends to play out with the trend. So this is that premature entry that you don't necessarily have the most confirmation with. But within this entry up here, you have the biggest probability on your side with the confirmations, right? You have price action above the VWAP, price action above 9 EMA and 20 EMA. The 9 has crossed the 20 EMA, so it went from bearish price action with the EMAs to bullish price action with the EMAs. And if you're following structure as well, you now have this higher point up here, right? Like I stated, if you were looking for bearish price action, you would be looking for this to come down here, to hold here, and then continue downward, right? But that did not happen. It failed to create a lower point, a lower impulse, and it actually began to play upside. But within this funnel structure, I was able to tell that, hey, this price action can have a potential of upside here. So now that we went ahead and keep on playing, bam, right? What does it do? It fills the gap. right at the gap area, right? And the 1.272. So that's essentially what you're looking for with fib plays of breakouts, as well as the actual pullbacks and the impulses. So that being said, let's continue to see what happens with price action now that it has hit the target, right? Now, so this is basically the plays here, right? You had this first play here with the EMA impulse. This is that premature entry play. Price action down here. Golden ratio hits the 1.272, right? That's the first play. So you got that first impulse. You went ahead and played that, or if you got in within this area, you're just chilling this whole move up, right? You're looking for this gap to be filled. So let's go ahead and erase that. And then the next potential entry was the flag continuation, which is another breakout play, right? To the upside for continuation. You're looking for the retracement to the golden ratio of this impulse to then continue to the 1.272, right? That's where you would be looking to take your profit, as well as now that it has filled the gap. So that being said, those are my two plays that I do go ahead and focus in. Using the 5-minute and 3-minute time frames, I went ahead and explained to you guys with EMAs, with price action, as well as with market structure. Hope you guys are able to go ahead and use this in real time, backtest this strat or this edge, and hopefully you guys are able to make some funds and go ahead and take your trading to the next level. Thank you very much for watching. Stay tuned for next video. See ya.